why 2025 for Ethereum, the Bitcoin and MicroStrategy's 2020 pivot made a lot of sense because Bitcoin was only 11,000 at that time. And he represented the sole way to get exposure to Bitcoin for any institutional equity manager.
Just 12 weeks ago, Bitmine, a relatively small Bitcoin mining firm, announced one of the boldest corporate transformations in crypto history. Under its new chairman, the company shifted its strategy from Bitcoin mining to becoming the world's largest corporate holder of Ethereum. Bitmine still mines Bitcoin, but only as a symbolic remnant of its past. Its real focus is now Ethereum. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
3 months ago, so 12 weeks ago, I became chairman of Bitmine version and led a transformation, as you point out, where the company went from being a small Bitcoin miner to one where it continues to mine Bitcoin on a very small way, but now its primary treasury asset is Ethereum. And in the ensuing 12 weeks, we've become the largest holder of Ethereum in the world. Today, we announced 2.8 million ETH tokens, which is, with the cash on hand, it's about $13.5 billion worth of crypto.
And those of us watching you so carefully as you make these announcements about how much Ether you own, we're also trying to figure out the number of shares you have outstanding so we can understand ETH per share, which I know is a big driver here.
Yes. And we do provide periodic updates on that.
Yeah, of course.
Yes. And but we've done this in a way that has been accretive to Bitmine shareholders, because at the start of this process, there was about $4 of Ethereum per share. That's when the announced transaction happened, and the stock price of Bitmine was $4.50. And on August 27th, which was the last update, so we're due for a new update, the stock had Ethereum per share of $39. So almost a 9 times increase, almost 10 times increase in those 8 weeks. We have since increased it again in the past 4 weeks, but the company is working hard to make sure that every Bitmine share has more Ethereum every day. I believe globally 70 Ethereum DATs. So it's very large space, but it is, as you coined, winner take most. If you look at trading volume, Bitmine trades $2.5 billion per day. And I think increasingly people look at a trading volume as really the critical measure of success for a treasury strategy. It ranks as the 28th most traded stock in America. And combining Bitmine with MicroStrategy, the two of us in total account for 86% of all trading volume of global crypto treasuries. So we are the two institutionally liquid stocks. I think that 2025 is showing you that DATs are coming into existence really because the foundation and the crypto community actually need them. But going back to Cathie's question about like why 2025 for Ethereum, the Bitcoin and MicroStrategy's 2020 pivot made a lot of sense because Bitcoin was only 11,000 at that time. And he represented the sole way to get exposure to Bitcoin for any institutional equity manager.
Well, except for GBTC, right? Because we were in GBTC.
But for a firm like Capital Research or T. Rowe, they're unable to buy a closed-end fund or an ETF or directly own crypto because their mandates require them to own a corporate equity.
I see. So
Overstock was probably the only way someone could buy Bitcoin in the past. And then MicroStrategy came along. So MicroStrategy is almost 2.0 as Bitcoin treasury. what he's done successfully, of course, is really to upscale it so rapidly, because he went from having $2 of Bitcoin per share to over $250 per Bitcoin share, per MicroStrategy share today. So he has created enormous shareholder returns, because the security business, of course, has continued to really muddle along at basically zero growth. In Ethereum, I think the moment is really this year, because this is the year that Wall Street and governmental regulations became friendly to think about rebuilding on the blockchain. And part one, of course, was the stable coins, and stable coins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto, because it has become a breakout product, and it has created two enormous companies, one being Circle, which I know Ark was an anchor investor in the IPO, and the other is Tether. Tether today is raising money at a $500 billion valuation and roughly 300 employees. That's about $1.7 billion of market value per employee.
Yeah, we featured that. We featured that, Tom, in last year's Big Ideas, because we said, oh my goodness, at the time it had 180 employees. We said, there's never been anything like this before. Right.
Yeah.
So you're right.
Ethereum is no longer just a blockchain. It's the base layer for tokenized finance, the next internet of value. Bitcoin remains the bedrock, the digital gold that underpins global trust. And together they form a new dual monetary system. Sound money plus programmable value. Bitmine and MicroStrategy are the corporate vehicles leading that charge, the institutional bridges between two worlds that are finally merging.
So JP Morgan, who just $869 billion, has 313,000 employees for 2.8 million of value per employee. Tether is showing you a crypto native bank is fundamentally vastly more profitable. And that's what I think is happening on smart contract blockchains that are neutral, like Ethereum and Solana. But it really only could have started in 2025.
One of the reasons I think the timing was good is, yes, the regulatory changes, critical. Check the box, first the ETFs in the old administration, but now the, unencumbered deregulation, just, tremendous openness to it. And we were having trouble gaining access to ETH for our ETFs, which are not like mutual funds. They have a little more, they have more degrees of freedom, shall we say. We didn't want to use one of the Ether ETFs because the SEC does not yet allow staking. And we tried to gain access through 3iQ and other Canadian ETFs, which do allow staking. But then we were becoming way too big a percentage of those. And we were also subjecting the funds to the risks of bad income. So the reason I asked you about timing is you came along at the time we were trying to figure this out and provided a solution. So I did want to, I asked for that reason, because you really did solve a problem.
Treasuries actually play a role in the actual ecosystem, because one, the knowledge base is capital markets, but with transference into the DeFi world. We found a lot of important and useful conversations taking place between Bitmine and the Ethereum Foundation, and even the founders of Ethereum, because we can help bridge this knowledge of what is Wall Street looking for? What are the low regulatory or high regulatory and the features that they're looking for on a blockchain or an L2. But we represent a committed group of permanent capital with the governance coming from a mandate from shareholders. And we've been then using that, and we will be using that to help seed the appropriate DeFi and crypto projects, but also the rails that come into Ethereum. And I think another role that we can play is, of course, just helping communicate what Ethereum actually wants to do. I think we found many of the people in the DeFi system, especially when we were at Token 25, says that they felt that Bitmine helped really clean up the narrative of Ethereum and make Ethereum a lot more credible in the minds of institutions. And we've actually found that in our conversations, of course, with actual builders, because we've been meeting with banks that are now trying to understand how to build on top of crypto. And of course, they want to take advantage of, again, our transfer knowledge base. Because remember, the knowledge in the traditional finance world is different about their understanding of crypto and who they can trust and who they can't. Oh, and there's one other thing that we are also providing liquidity, because, we have 2.8 million ETH tokens. And believe it or not, even ETFs that stake need a liquidity backstop. So I think that an entity like Bitmine can also play a role in actually providing contingent liquidity for even the ETF world. Okay. Well, if I could rewind a little bit to 1971, in our chairman's message last month, we addressed how gold versus Wall Street grew post 1971. So 1971 was when Nixon formally withdrew the US from the gold standard. The immediate beneficiary was there was demand and a market to own gold. And so people would say that was your, first implication. But what we wrote about and talked about in our message was that in 1971, the dollar became fully synthetic because it was no longer backed by anything. And so there was risk that the world would go off the dollar standard. So in stepped Wall Street to create products to propagate the future of Wall Street, including, and we listed, I think, 14 products that emerged over the next decade, from money market funds to credit to mortgage-backed securities to futures, etc. And dollar dominance by the end of that period went from 27% of GDP terms, but to 57% of central bank reserves and 80% of financial transaction quotes. So Wall Street was created products that made the dollar dominant, and the market cap of equities today is 40 trillion compared to 2 trillion for gold. So in other words, gold is 5% of all available assets. And so in 2025, we think everything is now becoming synthetic or tokenized, sorry, not synthetic. So as we move not just dollars onto the blockchain, which is stablecoins, but we'll move stocks and real estate, dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold post 71. Now, that is just our working theory, because I am still a Bitcoin bull. So I'm very bullish on Bitcoin, and I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million, but we can see higher values. But that would, of course, provide upside to a neutral smart contract platform where a lot of Wall Street will innovate of real-world assets.
Bitcoin will remain the store of value. Ethereum will become the engine of digital finance. And companies like MicroStrategy and Bitmine will stand as the pillars connecting Wall Street to Web3. This isn't just about price targets or speculation. It's about the architecture of the next economy, a future where every asset, every contract, and every dollar exists on a blockchain.